I have been looking forward to this conversation since Wednesday afternoon. Wednesday afternoon, of course, being Fed Day, Fed press conference, and of course, market reaction. Let's bring Taylor from Life Goal Investments, 10-year Wall Street veteran. What the heck happened last week? Wow, that was a
Boy,
fun end of the week.
did we get a rip-roaring rally out of the market or what? Holy smokes. You couldn't get enough upside on that. Yeah, it'll be interesting to see how this kind of continues to play out. But yeah, the Fed didn't say, in my opinion, what the market took from it. But again, the market's never wrong, at least in the short term. So we'll figure out where it goes from here.
Yeah, so the Fed gave us no rate increase, which I think all of us expected.
Yep.
Um, I I actually would tell you they were more dovish, certainly more dovish than I had hoped. Right,
Yep.
my hope was that Jerome would still keep being the big bad wolf, keep talking tough, blah blah blah, but not doing anything.
Yep.
I think he backed off that, and specifically backed off it about halfway through the press conference. He let it slip that he's getting some housing information that is essentially crumbling, and I think he's like, "Whoa, we're starting to break stuff." So he was way more dovish than I was hoping, and really even thought he would be.
Yeah, I think I disagree. I
Awesome.
think that's the way the market has certainly perceived it. Obviously, you've seen a rip in equities, but the other thing that you've also seen is one, bond yields have come roaring downwards. Roaring.
Yeah.
So bond yields were at 5% on the 10-year, and they've knocked 30, 32 basis points off the top of that, come ripping downwards on this information. There was also some other weak economic information that came out last week that we can certainly touch on, but a lot of it is predicated on the thoughts of the Fed. I didn't hear the same thing everyone else heard. I heard the exact same comments that we've heard looking backwards. Now, we are not confident that we are restrictive enough. Those are quotes out of his mouth. We're not confident that we are restrictive enough to restore 2% inflation, whatever he says. He's like a
Yeah,
broken
he
record now.
was very much on script, like he was reading
Yep.
answers.
And he said unequivocally that they are not yet considering rate cuts.
Oh, of
And
course.
so that was an interesting comment because what you had was going into that meeting, you had the market pricing in a 20% chance. I think we talked about 23% last week of a rate hike in December. Now it's at 10. And we had 3 rate cuts coming next year in 2024. Now we have 4 on the
Oh my
backs of
good,
him
really?
saying priced in a
4?
whole nother cut next year. On the backs of him saying unequivocally, we are not considering cuts at this point. And I think that wasn't a comment meaning this next meeting or the one after that. They're not talking about cuts for the foreseeable future right now. And so I look at that and say, man, the market is just not believing the Fed. And they haven't believed the Fed now for the better part of 18 months when the Fed has said higher for longer. Again, I didn't hear the dovish nature or tone to Jerome Powell's comments that everyone else did. But again,
Yeah, it
the
would be fun
market's
to watch
all
it
knowing.
together because well, again, maybe it's because I went in hoping for super, like, big bad wolf Jerome, and
Yeah.
we didn't get that.
Yeah.
So maybe it's just my expectation levels were so high. So maybe that's where I'm off. But when we talk about the market, uh, I think the market's pricing in no more rate hikes. I saw this morning, I saw 7% chance for December. You said 10, same thing.
Yep. Yep.
But now we're looking at 12 in January and 12 in March. I mean, we're talking they're done, right? The Fed is at the terminal rate. That's kind of what the market is saying.
You're absolutely right. And you actually made a comment on last week's show when we talked about the fact that it might not be December. It might be into the new year if we get a rate hike. And
Right.
someone asked that question specifically. It was a woman from Reuters or something like
I
that
remember that.
during the
Yeah.
meeting. And she asked specifically, if you don't move in December, does that mean you aren't going to move? And he said, no, that's obviously not the case. They're not going to tell you that, right? But
Yeah,
he
of
did
course.
say, we look at it meeting by meeting. And just because we don't move in December, we know things work on a lag. We're letting things work through the pipeline right now. And depending on where it comes out on the other side, that's not to say if we don't move in September that we won't
Yeah.
hire in the foreseeable.
That's just the Fed protecting their ass, because let's just keep it really simple. If they don't raise in December, that will be 3 straight meetings of bupkis.
Yep.
The only way they raise in January, and I think the next one's March, is if inflation reaccelerates. So let's just go there.
Yeah, but that's the underpinning for everything, though.
No, of course. But yeah, but let's talk about it. Let's just have a
Yep.
real conversation about the underpinnings of inflation.
Yep.
Is there a chance that inflation takes off again somewhere? Absolutely. Hence, the Fed wants, they don't want to be transitory Fed again, right? They don't want to make that mistake.
Correct. Correct.
But we've talked about shelter. Shelter's on a downward, at least for the next 4 to 5 months. It's mathematically certain. We've seen gas and oil roll over hard,
We have.
right? Um, there's heaven, hopefully good karma continues, and Israel and Hamas and Ukraine and Russia resolve in the next 60 days and we de-risk World War III. There's a lot of things to think about that, maybe we're going to get through this, and inflation is sub 3%, early next year, maybe.
I tend to think you're right. I tend to think that inflation is coming down, but I'm not as certain as you are. Right. So
Hmm.
I'm not, and you're mathematically certain on the housing numbers or the shelter numbers, but we just got an uptick last month in the shelter numbers. And I do think that it's more likely that they roll over and come back down. But there are some blips out there that things are happening where we didn't necessarily foresee it. Now, the oil and the energy obviously shocked higher, and we have seen it roll over. I think there's 5 or 6 straight weeks of gas prices coming down.
Yeah,
So that is
they're
going to
near a
be
record low, like 350 or 47 or something. Yeah.
that's going to be incredibly, incredibly helpful. There's no doubt about that.
Yeah.
Yeah, I think that the tendency is that inflation is going to come down. I think it's just the large outstanding unknowns. You had, and this thing in the Middle East right now is a scary proposition. Like
Oh,
I still am, I still am completely weary of that because it hasn't had the
absolutely.
impact on the market that Russia invading the Ukraine did. That had a much more meaningful impact in the market than what we've seen so far. So we'll see. I tend to think you're right. I tend to think that the Fed is probably done.
So let's talk
As well.
about the other, like there's two things. Inflation. So I think it's coming down a little more certain than you. Cool. The other one's the job market. I think there are clear signs that the job market is weakening. And, we'll talk about this hopefully in video number 4, but unemployment's now up 0.5% from the bottom.
Yep.
And historically speaking, that's a signal that a recession is around the corner. Now, this time could be different. We're coming off 3.4 to 3.9. We've never done that before. I mean, I get it, but
yep.
The job market is I think it's weakening. And now you got Citigroup talking about 10% plus layoffs, right? With Project Bora Bora. What? Who comes up with these names? But man, lots of stuff.
And you also saw some weak economic information last week out of the purchasing manager index, the PMIs, both on the manufacturing, and then finally some consistency downward on services. Services has been so strong as people have continued to go out and spend money on bars, restaurants, flying places, hotels, etc. Services is starting to roll over. It seems like a little bit, where you've now had 2 negative ticks in a row on services, which has been what's been holding up the economy in such a massive way. So I tend to agree. We had light jobs information on Friday, which certainly kind of pretends the same thing that you're saying there. So I'm with you, and you're talking me more in your direction. There's no doubt about it. But the Fed is still just cautious, right? The last thing in the world they want is a 1970s experiment of.
No, that is bingo. That's where you're locked in. I totally agree with you. But to me, it's a chess move. What does the Fed not want to do? And specifically, what does Powell want to do? He does not want to be Arthur Burns. He doesn't want to signal we've beat inflation, have market psychology, the animal spirits, as Greenspan called it, take over, and we reinflate.
Correct.
So he's going to be the big bad wolf blowing on this thing until, all next year. I think he's going to keep threatening that another raise is coming. It's not coming.
And there were 2 other Arthur Burnses during that period as well, from the 1970 to 1980s. You had 3 Fed chairmen get whacked along the way because they did this and didn't control inflation. But I think, this is crazy to say because everyone hates the Fed, and because the Fed makes things expensive, yada, yada. It's a necessary evil. But I do think the Fed is doing the right thing. I think they got to where we're at right now. I think pausing where we're at right now is the right move, in continuing to let this data trickle through.
Oh, yeah.
The inflationary pressure we've seen in the short term isn't meaningful inflationary pressure, right? And no, it doesn't feel good, and no one wants to hear that. Like, we want to commiserate that food prices are high, and they are. I get it. But at the end of the day, it's like, we're not getting the level of increase that we saw in the past. It's
Yeah.
moderated in a massive way. And if it sustains moving sideways like this, then they don't need to raise interest rates higher. Even though we're nowhere near that 2%, it just takes time for things to leak through the system. So from mid threes, low threes to two is going to take some time, and
Oh,
higher
agreed.
rates isn't going to force it down that much quicker.
So at the end of the day, I think the market is saying two things. I want you to tell me which one you did, because I don't think they both can be right. Maybe they can. But which one do you believe more or less than the other? The market is saying the Fed is done, right? 7, 12, and 12% increases coming, so not likely. And
Yep.
they're saying 4 cuts next year. Um, I know which one I think, which one I believe, but which one do you believe and which one don't you believe?
I believe the Fed is done. Again, I am kind of coming off the stance of I said one more hike. And I'm now believing that with the rollover in gas prices and things like that, that might come down and we might not get that hike. But I do not think we're getting 4 cuts next year. And
Yeah.
I've been very vocal about that.
Yeah, I don't. I think that's more wishful thinking. Um, I mean, if I told you instead of 4, because I think right now where we're at, I think 4 is crazy. What if I told you 2 rate cuts?
Fair, fair. I would
Okay.
actually probably be a buyer of 2 rate cuts
Okay.
into the latter part of next year. Again, the leading economic indicators are pretty barren. They're not looking great.
Mhm.
You look at earnings reports. On the other hand, the analyst expectations are that the market's going to be firing apparently next year because earning expectations are so high. I just don't see that playing out. So, leading economic indicators, although they have not worked, right? Because they've been negative now for what, 18 straight months, something like that,
Mhm.
and we
Yeah.
haven't entered a recession. At some point, the screws get pegged to the economy, and high inflation at 9% comes home to roost. And I'm not saying it needs to be a vicious recession, but
Yeah.
a recession has to come at some point. And I think
Well,
that is
again,
likely.
recessions are a natural part of the business cycle. They're a
Correct.
cleansing mechanism. They should be expected and planned for. Great opportunity. All the things we've talked about on this channel. Where can people find you? Because you do amazing daily content.
Yeah, thanks so much. Find us at Life Goal Investments. We're on both Instagram and TikTok, putting out 60 seconds a day, something like that.
It's amazing what you drop in 60 seconds. And I will say, you look like you're having fun. It doesn't feel like work. So keep it up.
Appreciate you, Michael.